Welcome to Momentum Monday, Howard.
I'm just catching. I'm catching the last few minutes of the Tuesday evening Tuscany sun here. How do I look?
You're looking rested. You're looking like you've been milking sheep, for the past week or so.
I mean, there's no milking sheep. That's Bulgaria. You can't confuse Italy and Bulgaria. You guys are bordering countries, I think.
Almost.
Almost.
Yeah.
A lot of Romanian. There's a lot of Romanians here in Tuscany. Did you know that?
I had no idea.
Are you at war with the Romanians right now?
No, we're good friends. No.
Oh, you're good friends? Kind of like America and Canada good friends? Or like we've had enough wars?
But well, we had many wars in the past, but that's in the past. Like we're all
trust the Romanians. I mean, if you ask Trump, he doesn't like the Romanians. Okay, let's get to here I am. Clear thinking. It's really a spectacular day. Hopefully, people can appreciate the locale. And this is all paid for by Market Smith and IBD. No, I'm kidding. But they do sponsor Momentum Monday. Ivan uses their charts. We rely on them for a lot of the data that we use and earnings. And so, Ivan, let's get to the markets. Usually we do this on Monday, obviously.
Yes, let me share my screen real quick.
Now we're going to share screens and get right to Momentum Monday. So,
okay. Can you see my screen?
Are we off my ugly face yet and to the market? I can see your screen.
Okay, so you wanted to talk about that chart for some reason. I mean, it's a bull market.
No one can understand you, buddy. I'm kidding. So thanks for pulling this up. Just for people just tuning into the show for the first time, Ivan and I take a quick tour, 20 minutes around the market, see what's working, what isn't working, what might work. Okay, the markets have been working. We've really kind of covered that ad nauseum for the last 6-7 months, and it's working better than ever right now, the S&P 500. But Ivan, explain what people see here.
I mean, you have a chart of the S&P 500 with a 1 month average equity put to call ratio, which shows how many calls, how many puts are bought versus how many calls. Yes. And apparently, people usually we see a spike in put buying when people want to hedge their long-term equity positions, and currently no one's hedging. Apparently, everyone is bullish. No one's buying protection. Everyone's buying calls. So yes, we see a big drop.
Like the 60s, kind of like the 60s in the United States. So Ivan, I think this works better. I prefer to use this as an indicator when puts are very high for fear. So I don't think it's as good an indicator. I just think I wanted people to see this to know that it's been good for a while there. People are a little bit complacent again. And the S&P isn't even really, it's 4 or 5% from all-time highs. I think the NAS, so I'm saying, I wanted to get across here, it's been good for a while. Don't panic and chase stocks right here. Don't be like the suckers. Even if today is the low point for the next 6 months, there will be great entries. You can't rush in and just because, guys like us and momentum and trend traders have been making a lot of money. You have to treat the markets with respect. And right now there's a little bit of lack of respect for the gains here. And so I use this as like I wrote yesterday, this is not, there's no crime in taking profits. And so I just want people to take, it's been a fun run here on Momentum Mondays for months. And I think it's important that, summertime, lack of fear, it's easy to buy stocks right now. Everything's going up, at least in tech. And so you got to be a little bit careful. Okay, so now, Ivan, let's get to the charts that you wanted to share.
Yeah, and it's not only tech, by the way. Yes, absolutely. The Nasdaq 100 is the leading index. It's up almost 10% year to date. It's at all-time highs. It just cleared that beautiful cup and handle, and usually people take the depth of the cup, which is about 15 points, and they add it to the pivot, and they put that as a price target.
Hang on, buddy. Is that buzzing you or me?
Oh, it's outside. Outside. It's me. Sorry. There's nothing I can do.
I would duck. Sounds like you're under attack.
No, it was quite,
Are the robots coming for you, my man?
no, it's just a car alarm outside. There's nothing I can do. It will stop in a second.
It looks like you're living in a hostile environment.
Oh, San Diego. It could be very hostile sometimes. No, depending on the weather. I mean, this morning is very cloudy, so I guess people are very moody. They haven't seen the sun, in 2 days. So
7 p.m. It's Tuesday, midday there for the market. Nasdaq, as you said, all-time highs here. I guess you're going through relative strength. I mean, up in hand. I mean, you have all kinds of great phenomena. Let's go through some other charts. So Nasdaq looking strong.
I mean, pretty much any stock that's on the Nasdaq 100 is looking amazing. Netflix continues to climb. It is going to be added to the S&P 100.
Yes. One of my favorites, Shopify, hit all-time highs yesterday and continues today.
Which is a big milestone. Shopify, they just broke out. So the Chinese Shopify as well, Baozun, they had amazing earnings.
Shopify, Ivan. Trick question.
Yes, it's the Canadian Shopify used in Western Europe. It's doing amazing. It's been an amazing run, and it just built a new base in the past few months, and now it's just breaking out again. It's heavily shorted, and short sellers have to cover at some point. The question is, are they going to cover on weakness with profits, or are they going to cover on strength when they're forced? And I see quite a few stocks that have about 15-20% short interest, 15%.
Give me a couple examples, Ivan.
Yes, let's see. Shutterfly is one of them. It's breaking out today. About 18% of their float is short. It's breaking out from that.
Oh my goodness! Beautiful
base today. And as I said, the buying of short sellers can fuel a substantial rally in the short term. Also, the food delivery company Grubhub.
Unbelievable, yeah.
Never break out. 20% of their float is short. Twitter has been, I mean, their float, probably only 3 or 4% of their float is short, but they've been on an amazing run in the past week or so, and it was just announced that they are becoming part of the S&P 500, which is an amazing milestone for Jack and all the employees there. And if we zoom out, I mean, it's not near all-time highs, but it's slowly climbing.
It is. I mean, everybody had given up on this stock. You know, we've talked about it since the low 20s when we liked it. It's not a typical, I would say, momentum stock for me because of the all-time highs. But, basically everybody that was at this company has left except Jack. So you have everybody cleared out of the stock. If that 37 level was huge, closed above it yesterday, and then boom, gets added to the S&P. Surprises generally happen in the direction of the trend. I wanted to take a second, Ivan, and go through, as Trump, Trump's taking credit for a lot of this rally. I don't really care at this point. I don't think he can move markets to the upside. I think he can, and I think politicians and people can move stocks to the downside. Let's take a look at the solar industry, because that was one that I got wrong on the charts. I don't know, and that was looking beautiful. So this is the opposite side. This is why I say people have to respect how good it's been and how things can turn. Now, granted, solar is not in the same, it's not looking at the same as the cash flow machines like the FANG stocks and the Nasdaq 100 stocks. But take a look. Take a look at these stocks. They were breaking out. If you look back just in March, these things were setting up beautifully before this Nasdaq went on this massive run over the last month and a half. And solar was the first group that looked poised to break out. I've encircled that there, like in the mid 70s. They're on First Solar, and I didn't necessarily take the bait, but it was really one of the perfect, almost had to take the setup. and I wrote about it. We talked about it. Earnings look good, but I think this is a case where Trump has come out and just quadrupled down on coal. This industry has just disappointed people for years. I'm in Italy, and Tuscany is nothing but sun. But the Italian government, same thing. You can't put solar panels on these places. No one wants to spend money upgrading. So solar at some point. Oh, and that's the coal ETF. It's just for a reason.
It's looking very constructive, by the way. I don't know why.
But it's dark ages. Like, the point is, I'm sitting here bathed in sun all day. It's relatively clean energy. Solar looked perfect. So again, not all breakouts work, and this is why you have to kind of be diversified. And it's another reason why I like to understand the stocks that I own. Because I want to be able to understand if I should be buying the dips. And here with solar, you've had no chance. If you go back to First Solar, Ivan, there has been nowhere to buy this dip. It's just been straight down 20% over the last week and a half. And if you don't really understand solar, now what do you do? So again, you got to be true to some kind of money management principles. And the same thing can happen to the NASDAQ, right? Like, people don't think this can end, but when things look great, things can turn, and then, you got to understand your field position and what you do. Okay, so now let's go through some ideas that you may have, Ivan, that look fresh.
There've been so many fresh breakouts recently, and then from long basis, and even in large cap stocks, which is, I think, it's a significant sign. NVDA, for example, after spending a few months of going sideways, building a new base, they just broke out. And I think they have a potential to reach 300 over the next quarter or so. And they're at 265 now. I think beautiful breakout. So, I mean, you can buy on a small pullback, or you can start a small position here and then add when it sets up again. The two big Chinese companies, Alibaba especially, they also just broke out.
Yeah, we talked about it having a battle at 200. It won the battle and it's quickly shot to 2.
Yeah, and 10% of their float is short. So buyers are dominating right now, and it's not going to be a straight move higher. There will be some back and forth, some feeling, but as long as this market continues decent, I think this stock will outperform. And last week there were a couple analysts that came out with a 300 price target for Alibaba, pointing their extremely fast growth, and also pointing the dominant position that they have in payment, they and also Tencent. And recently there've been quite a few new Chinese IPOs on the US markets, that have already doubled and tripled in a short period of time. Many people don't know that the big tech giants in China actually own a substantial percentage of those recent IPO that they've done so well.
Good point. Good point. I've tried to tell people that, like, the way to play China is through the bigger companies. I know people want to chase returns, but Baba and Tencent own a pile of these IPOs themselves. They're kind of like holding companies at this point. I don't like the action. I'm sticking with Tencent and Alibaba. I don't like the froth. I think macro wise, Ivan, what's interesting is that we keep talking about the economics. Why? The headlines are so creepy. We should be, tariffs, trade wars, Italy bonds blowing up. Why are American stocks working? I can deal with that. I understand the companies. I use the products, etc. I have a problem when the froth starts creeping into the smaller cap names. It's fun when we were saying, the Tinder. Let's pull up the Tinder of China, for example, Momo. You and I have been talking about that for months. I'm friends with people at Tinder. They hate this company. It is a knockoff. It is from what I can do my due diligence on this, this is a pure ripoff. So this is not an illegitimate company. This is a real company that is completely. So it does make sense.
I think I lost you for a second, Howard. The sounds.
I was going to say that this is a clear case of a true leader now in China. It really is the Tinder of China from people that I talk to that work at Tinder, that this is a complete knockoff. And so, you know, you can see this company's traded for a long time, has a real base. This is more of a mature breakout in a proven model in the United States in a bigger market in China. So I think this is one of those stocks that we've been talking about for months and really did break out. So that one looks incredible.
It's a $10 billion company already. So
yeah. These are not little baby companies. I said, like the froth here is like you're not buying, you know, we're chasing here. You know, the markets are good. You have to look for good setups, but you really have to know what you own underneath because there could be 30% pullbacks, as we just showed with First Solar. The stocks look great, and they cannot look great. So if you don't have the field position right and your position sizing right late in these trends, but at the same time, this really is Tinder of China. And you know, it's a proxy for you know, they don't have to worry about Facebook coming into their market. So they, you know, it's a way. If you want to own dating, you may want to put 70% of your money in an American stock and 30% of the money in a Chinese, or you know, 80-20 or 90-10. I kind of do 90-10. But it's, you know, everybody risks their own. Let's go back to your social leverage. Let's go back to the market wisdom list, Ivan, and see if anything, we pick up anything from that.
Yeah, we continue to have a lot of software, semiconductors. Let me update this to see.
Same name.
Cybersecurity. Yeah, and you can see here how many weeks each stock has been on the list. Twitter has been, this is its 4th week. It's already up 22%. Amazon already 30 weeks, 51%. iSurgical, they had a recent fresh breakout. It's a slow mover, you know, it's a high price stock. Square continues to defy gravity. It's been on and off the list so many times. It's probably tripled in the past.
So what new name here is, what do we got? Some new names.
Well, Wix.com is not really a new company, new name. It's just a good setup that just showed up.
It's actually an interesting company. As I've talked about it before, I use WordPress for my blog. Wix is basically really creatively built a WordPress for everybody, you know, using TV, kind of like the Quicken model for building a blog and a website. And Wix got public. WordPress is you know, 40% of all websites, but Wix, you know, kids in high school got to create a website for class to, you know, competes also with Shopify. And Wix is, you know, makes sense that Wix is breaking out here. You know, platforms are hot. Let's take a look at this Microsoft. Let's also just end with taking a look at the biggest deal, which is a $7.5 billion buy of a non-profitable company. And I think this will explain why enterprise and software stocks have been working. And especially, you know, we've talked about Twilio, which is a stock that I've been long. If we take a look at Twilio, right, platform, API-based, you know, one-to-one marketing communications built on top of, you know, phone services for smaller businesses. Actually, Uber uses it. But if we go back to Microsoft, they just paid $7.5 billion for a non-profitable company. One of the largest depository of code, was an open source product, will remain open source, but now Microsoft's the guardian. And in the simplest way, it just kind of, you know, people will argue this is the top. And it could be one of those AOL, Time Warner type tops. The difference is Microsoft's using 100% stock. They are buying the largest depository of open source, codes for webs, code. And for Microsoft, and reading some of this, Ben Thompson and some of the other software developers, what's interesting is that, in a war where Google's competing with Amazon, competing with Microsoft, competing with Oracle to sell cloud services, now Apple's got, kind of an edge in upselling services if engineers are depositing their code at GitHub. So $7.5 billion. Microsoft, I'm reading from the geeks that they love the acquisition. From a decentralized, centralized standpoint, I think this is another notch in the cap for people that are rooting for decentralized systems, because eventually all these open systems are going to get bought by the FANGs of the world, and they're going to be used as hooks to get people to buy services. I don't know if that's good or bad. It's definitely great if you're long the NASDAQ, and it's definitely great, like for Mark Andreessen, who put a couple $100 million into GitHub. The last valuation was $2 billion. So I think they made $1 billion off that deal, just off a $100 or $200 million investment over 4 or 5 years. So you can see that Microsoft continues to do what they have to do to be, to keep pace with the other giants in the industry. And this is just bullish for startups in general. It'll lead to some fraud, but it also frees up capital. There's $7.5 billion of capital that's going to get repurposed. And, that can be good and bad. It leads to inflation in many of those as deals get bid up. But it's also good to return capital to investors and let it get repurposed into new industries, possibly. So again, these are good things. They're not perfectly good, but for Microsoft, it doesn't really affect them. They're using stock, and they're thinking out 8 to 10 years. So it's a pretty exciting continuation of trend around software, open source, developer programs, enterprise software. And the giants are not resting. They're spending money. They're using stock. They're being creative, and they're not sitting back.
Yeah, it seems the market has already paid for that acquisition. I mean, Microsoft's up 1%. That's almost $8 billion, and they paid 7.5. So,
well, and what's their PE right now? Their PE, again, not the PEs matter to me, but let's just use Y. Yeah. So they're getting a 27.5 multiple on Microsoft right now, and they just went and used that to buy. They didn't use any of their cash. If we pull up Apple, which we haven't talked about, we might as well end here because it's really closing in on $1 trillion. Is that the current price, 193, Ivan?
Yes.
So if we look at Apple, it's kind of been a laggard the last year and a half relative to the NASDAQ and breaking out. Their PE, if they had a 40% higher PE, which Microsoft has, the company would be close to, $1.5 trillion right now if it traded. And most people could argue that, man, Apple deserves to trade at a higher PE than Microsoft. So again, relatively, that's what people are doing to kind of game this market. But if we look at the leaders, for whatever reason, and a lot of it could just be flight to safety and comfort in America's large cap tech stocks, but it's not just large caps, Ivan. If we look at micro caps or small caps, same thing, right?
Yeah. They're even doing better. I mean, the Russell 2000 is up 10% since the lows of in May.
Yeah.
In just 4 weeks. So that's a substantial move.
Donald Trump may not be able to read, but he can read a chart. And right now, American small business, as measured by the Russell 2000, and even the microcaps. I think EWC is the microcap.
I just showed the microcap. This is the small cap.
America is voting, or the world is voting on American small caps and as technology. There was a chart, Ivan, I shared of the percentage of technology, the S&P. Do you have that?
Let me find it for you on your website.
No, I shared it yesterday with you, but couldn't.
We are not ready with it. Let's open your website. I'm sure it's there. Okay, that's the chart. Right? Can you see it?
What's incredible to me is if we look at 99, the true bubble, kind of like Bitcoin's the closest thing to that, in certain select biotech areas. But now even biotech with cancer and oncology, I'm bullish. I just don't understand the space. We look at 99, where it was what percentage, Ivan? I can't see. NASDAQ.
99. I don't know.
What was the highest percentage you got? Like 70% of the NASDAQ? 40% of the NASDAQ?
Yeah. I mean, 48, 49.
Yeah. So here we are, about 19 years later. In technology is 24%.
26. Yeah.
So this is that BTFD that we talk about on StockTwits. You have to be prepared in this era of robots, AI, the cloud. There's still an overhang of fear from the tech bubble of 99 and what tech can do. So again, as much as I say don't chase, I think dips are going to surprise people. They're going to continue to get bought here. But there's no such thing as 100% winners as we saw with solar. I will end up again and say, I don't think Trump can wreck the NASDAQ. I do think he can lean on tougher industries and help certain crippled industries and hurt, kind of edge case industries like we're seeing with solar, the solar coal thing. The tone has not been good for solar here, and I think that's held it back. So solar's going to have to take a lot more time and get a lot broader distribution. Whereas with Netflix and Amazon, I don't think anything he can do right now other than just the companies themselves, multiples coming in to slow down. I'm in Italy, and the people that we're sharing, we're talking to, everybody from around the world, whether it's Bulgaria or Romania or Italy or France, Netflix, and questions about Amazon and Apple, etc. So we'll leave it with that. Thank you, Ivan, for helping put this together.
You're welcome, Howard. Okay, see you next week.
See you next week.